Sometimes a person will have such a terrific track record of being bankable that when he starts a new venture, you got to be on board. In 2013, Martin Franklin, the founder of Jarden, who's made us a fortune in that house of consumer brands over the years, do you know it's up more than 1,000% since the generational bottom in 2009? Well, he founded a new company called Platform Specialty Products. It's simple as PAH. Oh, and he did it with the backing of the big shot activist investor Bill Ackman, whose Pershing Square fund owns more than 20% of the business. Talk about some major names. Now, at first, Platform was really what's known as, it's kind of a shell company. It had a big pile of cash. Since then, though, Platform has acquired a series of chemical companies with a focus on specialty and agricultural chemicals. In October 2013, they bought the privately held McDermott for $1.8 billion. And they brought in CEO Dan Leever to run the whole company. Then last year, they picked up Chemtura Agro Solutions for roughly $1 billion and Agrifar for 300 million euros. Most recently, Platform made its biggest deal yet, acquiring Arista Life Science for $3.51 billion, in a deal that expected to give the company's earnings a 20% boost even before factoring in the synergies. In short, Platform Specialty Products is proving to be a very well-managed roll-up in the chemical space, and the stock is up 161% since it listed on the NYSE about 14 months ago, not to mention rallying 12% year-to-date. I think the stock can keep running. Don't take it from me. Let's check in with Dan Leever, the president and CEO of Platform Specialty Products, hear more about his company and his prospects. Mr. Leever, welcome to Mad Money. How are you?
Be here.
All right, good to see you. I want to get that price of that second acquisition right. It's $3 billion. You spent now, which means each time, just so we get all our viewers straight on this, you have done equity offerings.
That's correct.
You had a fantastic earnings report today. Should our viewers wait for another equity offering because you've done 6 of them, or is it just you kind of got all the money you need right now?
Well, we have all the money we need right now, but the next big deal that we do will require issuing more equity for sure.
And thank you for saying that, because my next question was from a terrific report from UBS today. Can Platform continue making acquisitions at this pace? They're saying some people are skeptical. They're not skeptical. I have to believe they know the company better than most, so it's certainly a possibility.
You just have to backtest Martin, and you look at what he did with Jarden. So
Right.
Jarden goes back 13 years. He started with $300 million in revenue. Today, it's $8 billion in revenue. This is the same model.
It really is, isn't it? Because
Exactly
I followed Martin for years, and I remember someone who's in the chemical business and then going and raising money on Wall Street.
Right. This is a very unique strategy. We're focused on high cash flow businesses. So we call it asset light, high touch. And it's really a
Capital's actually higher than all of those. Is that because of that asset-light model?
100%. If you think about the cash flow generation, think in terms of EBITDA less CapEx is the way a lot of people like to look at it. If you look at headline EBITDA, then you have gross earnings across a series of businesses. It gives you one picture, but if you look at the true cash flow generation, it's an entirely different
Yeah,
matter.
it was really big. Now, Dan, let me ask you, we had this whole thing with inversions in a lot of American companies. We had a company the other day that, Activist, which is one of the great American companies, but it's based in Ireland. It's really in America. Your company is not a plurality in the United States. Would you be able to reincorporate, given how little you actually have in the U.S.?
No, because we're a U.S.-owned company.
Okay,
So at the end of the day, this is a U.S.-centric business,
Right.
even though it's a very global, 180 different currencies that we trade in around the world.
Okay. Now, your background is such that that's not a problem because you had an international background to begin with. The ownership of Bill Ackman at 20 to 25%, let's say he decides that he doesn't want to own it because he's a hedge fund manager. He just wants to sell it. Is that something we should be thinking that could happen, and that maybe takes a less than longer term approach to it?
No, not at all. I mean, I think that Bill and his partners at Pershing are very long-term holders. If you look at many of the holdings like Canadian Pacific that they've invested in, they've been in that for a long time, and I think intend to be longer. This isn't a typical strategy of coming in to try to agitate management for change. He's a backer of Martin.
Are you happy in all the different divisions? I mean, not some of them are a little more industrial right now, and I happen to love the ag business. I love what DuPont's done. You have kind of all the good parts of DuPont. How about the
industry around electronics, oil and gas products, and that sort of thing.
Okay, so you've managed to be able to take it so that oil and gas isn't that big a piece anymore, right? Is that part of the business tougher right now?
No, actually, that part of the business is pretty good. And the reason for that is we play almost exclusively in the production side. So they don't stop producing, and particularly where we play is deep offshore drilling. That's the last asset they take offline. Right. So actually, the most recent periods for us were pretty good in that business.
Okay, and then finally, what do you envision here? I mean, are you trying to build the next DuPont? Are you trying to build the next great? I mean, what are you, the 14th largest chemical company, 15th largest specialty chemical already? Is the goal to be the biggest, or is the goal to be able to say, we've made a lot of money, take a look at us, Monsanto, and buy us?
Jim, we're trading around $26 a share. The future is $200 a share.
Bold, but you know what? Martin Franklin sat right there and said pretty much the same thing, and he did it. So who am I to doubt Martin Franklin or one of Martin Franklin's friends who's doing a great job? That's Dan Leever, President and CEO of Platform Specialty Products, PAH. Using a $200 price target, $26. You can't beat that. Stick with Cramer. Thank you, Dan.
All right.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.